Hi all, today we are going to discuss about key elements of input tax credit. Credit claimed on tax paid for inputs used in the course of businesses to offset against tax payable on output. Purpose of ITC. The purpose of input tax credit is to eliminate cascading tax effect, ensuring only value addition is taxed. Input tax credit timeline must be claimed within a specific period, that is, before the filing of the annual returns or within the deadline for the September return, whichever comes earlier. Section 16 of the CGST Act. ITC provisions are primarily laid down on providing the legislative backing for input credit claims. Um, Conditions for availing input tax credit: proper documentation, invoice, debit note, or bill of entry must clearly state the goods and service tax paid. GSTR to be matching. ITC can only be claimed if the supplier has correctly uploaded the details in their GSTR1 and it reflects in the buyer's GSTR2B. Partial inputs: even if partial goods or services are received, ITC can be claimed proportionally. Eligible goods and services for input tax credit. Input services specifies include services such as professional consultancy, legal fees, and the software that qualify for input tax credit. Imports. Input tax credit can also be claimed on the GST paid on imports of goods and services under the IGST framework. Job work, actually it is that is input tax credit is available for inputs sent to job workers for processing, provided the goods are returned within a specified time limit. Ineligible items for input tax credit, that is blocked credits. Luxury items: goods used for personal luxury, that is gifts or free samples, are excluded from input tax credit claims. Food and beverages: input tax credit on expenses related to employee canteen or event catering is not allowed unless mandatory under the law. Travel expenses: input tax credit on personal traveling expenses is disallowed, but travel for business purposes is allowed. Next is utilization hierarchy. Input tax credit on IGST must be first used to pay IGST, then CGST, then lastly state goods and service tax, ensuring the credit is exhausted efficiently. Priority usage: government ensures IGST credit is used first to balance interstate tax sharing, cross utilization, while CGST, then state goods and service tax cannot be cross utilized. That is, central goods and service tax cannot be used to pay state goods and service tax. Integrated goods and service tax could not be used for both. ITC reversal scenarios: time bound reversal. Input tax credit must be reversed if the supplier is not paid within 180 days from the invoice date. Reversal includes both the input tax credit and interest. Capital goods disposal. Input tax credit on capital goods must be reversed if these goods are sold or disposed of before a specified period, usually 5 years. Input lost or stolen. Input tax credit on goods that are lost, stolen, or damaged during business operations must be reversed as they are not considered to have been used for furthering the businesses. Input lost, stolen, um, but it is not considered to be furthering the businesses. Future prospects: with frequent changes in the GST laws, businesses must stay updated to ensure they maximize their input tax credit claims and avoid penalties. Impact on small businesses: input tax credit can significantly reduce cost for SMEs, allowing them to stay competitive by reducing their tax burden. Technology integration, automated GST software can help to better track and manage ITC, ensuring compliance and reducing errors. Thank you.